Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 6th, 2025, and we're diving into Coupang's recently released Q2 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Coupang's performance this quarter.
Let's get started with a brief introduction to Coupang. As a Fortune 150 company listed on the NYSE under the ticker CPNG, Coupang offers a range of services from retail to fintech. Their Q2 2025 earnings report has just been released, and we're here to break it down for you. Revenue and profitability overview. Let's start with the top line. Coupang reported net revenues of $8.5 billion for Q2 2025, marking a 16% increase year over year. John, can you elaborate on this growth?
Absolutely. The revenue growth is impressive, driven by both their product commerce and developing offerings segments. The gross profit also saw a significant increase of 20% year over year, reaching $2.6 billion. This indicates strong operational efficiency and cost management.
And what about their profitability?
Coupang's operating income rose to $149 million, a substantial improvement from a loss last year. Net income also turned positive at $31 million, up by $109 million from the previous year. This turnaround is a testament to their strategic initiatives paying off.
EPS forecast and analyst expectations. Now let's discuss the earnings per share. Analysts had forecasted an EPS of 7 cents, but Coupang reported an actual EPS of 2 cents. John, what does this tell us?
While the EPS of 2 cents is below the forecast, it's important to note that this is an increase of 6 cents from last year. The improvement in EPS reflects the company's enhanced profitability, although it fell short of analyst expectations.
What could be the reason for this discrepancy?
The difference could be attributed to higher operational costs or investments in growth initiatives that may not have been fully anticipated by analysts. However, the overall trend is positive, with significant year-over-year improvements.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. Coupang's adjusted EBITDA for the quarter was $428 million, up 30% year over year. What does this indicate?
This increase in adjusted EBITDA highlights Coupang's ability to enhance its operational efficiencies and manage costs effectively. The margin improvement is a positive sign for investors.
However, we see a decrease in operating and free cash flow. Can you explain this?
Yes, the operating cash flow decreased by $297 million and free cash flow by $729 million year over year. This is primarily due to the timing of capital expenditures and working capital fluctuations, which the company expects to normalize by year-end.
CEO and CFO statements. John, were there any notable statements from Coupang's leadership regarding these results?
Unfortunately, there were no specific statements from the CEO or CFO included in the report. However, the numbers speak for themselves, showing a strong performance and strategic growth.
It's always insightful to hear directly from the leadership, but as you mentioned, the financials provide a clear picture of their progress. Key takeaways. As we wrap up, let's summarize Coupang's Q2 2025 performance. The company reported strong revenue growth and improved profitability, although the EPS fell short of analyst expectations. John, any final thoughts?
Coupang's strategic initiatives are clearly yielding results, with significant improvements in revenue and profitability. Despite the EPS miss, the overall outlook remains positive, especially with their operational efficiencies and growth in active customers.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Coupang's performance in the comments below.